So, hello YouTube, welcome to yet another video. Today the first video with some nice slides. I made them for you. I'm gonna be going over the online prop firms, the truth, the pros, the cons about it, how you should treat a combine and stuff like this. Just my 2 cents, since I've been trying out evaluations, funded and so on for about 1.5 years now and tested most of the companies and stuff like this. So I want to give you guys a little bit of feedback, what I've learned, the mistakes I've made myself, so you maybe don't have to do them. So very sharp to me, just a short introduction. So I've been trading for around 3 years. For 1.5 years, I'm trading with prop firms, and I'm currently with Apex. But I made a ton of mistakes along my career. So yeah, maybe one or two of you guys want to listen to me and maybe prevent some of those mistakes. Also inserted here some proof of payout, that I'm not just an idiot who doesn't know what he's talking about, pretty much. So here my personal 2 cents on prop firm. So you gotta understand that most of the prop firms do not care if you're a profitable trader or not, okay? So those prop firms make the money off of evaluations, okay, of the resets, and of the funded account fees. Because once you pass evaluation, there is also, with most firms, a fee for your funded account, which is either a one-time fee or a monthly fee, depending on the company. That's how they make your money. Most of them never put you on live, so your orders will never actually hit the market. It will just be sim trading all the time. But obviously, when you're a funded account, you do get paid if you make money, but they are just like an online casino, okay, and using the market for it. They know 95% of the traders fail and blow their accounts, blow their funded accounts. So they have some rules which are designed kind of to make you fail, or at least very strict. They give you way too much contracts and size to trade in comparison to your drawdown. Yeah, they kind of want you to fail. They kind of want you to buy those resets. There are a few companies who are try to get their people to pass, and there are other companies who just straight up like having sales all the time and just want you to reset and so on, and just keep on buying accounts, and then they pay you traders who actually make money pay out of their pocket. So the guys who are buying refunds, okay, are pretty much paying for the guys who actually make money, but it's a net positive for them, because again, trading is very hard, and most of people fail at it, and especially with those rules. And then I think these online prop trading firms might even be higher than actual trading, because you can also just for a couple of bucks get a new account, get a reset and stuff like this, so you don't even treat it like your own account regarding to risk management. So the first message I want to give out to every one of you is stay on sim and develop and find your own edge, okay? The worst thing, in my opinion, a new trader can make is to jump straight away into evaluations and trade or real money. You gotta find your edge. If you don't have an edge, you're pretty much gambling, okay? So you gotta trade, you gotta learn how futures work, you gotta learn how your product trades and behaves, and not just being profitable on sim like for a week or so, okay? So like really like at least a couple months, best maybe 6 months or something like that, and then you can try out evaluation as kind of next step, okay, from sim trade. So here then I come to the pros and cons. So they are indeed a cheap way to start. So I think that's pretty nice, because you gotta remember with futures, most of the programs you gotta buy. So for example, if you're using Ninja, you need a license key for Ninja, and a lot of companies do give you that for free. So you get pretty much good free robust trading software, even though it might not be the best, but it's good enough, in my opinion. And there are even some companies like TikTok Trader, for example, who offers you a free license for Jigsaw or Bookmap, which is great. Then again, it's more realistic than Sim, okay? So you have now a little bit of money in the game, okay? So it kind of adds to the the emotions and bring them a little bit more in than just sim trading, okay? Also a huge pro is it limits the downside risk, okay? If you trade futures and you deposit the money on your broker, if you blow up the entire account, maybe even more, and then you own the broker some money, okay? So it just really limits the downside risk, which is, I think, in the beginning very important. Also, I think it tests the discipline. So if you want to do it the right way, okay, you gotta take it slow. You can't go in there and like expect to pass an evaluation with a 2,500 drawdown and 3,000 top profit target in like a week, okay? That's just not realistic, because now you have basically a $2,500 account if the drawdown is 2,500. We're gonna get into this a little bit later, but they say, okay, yeah, for example, yeah, now you have a 50K account, but your drawdown is just $2,500. So really you have a $2,500 account. And if the profit target is $3,000, okay, then you basically need to more than double the account size. And no traders are doubling their account size if you risk manage properly within a week, okay? Or just very rarely. So yeah, it tests your discipline. You gotta take it slow. You gotta do proper risk management and stuff like this, okay? Then I also already went over the free software. And also there are some prop firms, for example, like Trade Day, and also on the Trade homepage, there is some well-structured trading material for free, okay, available, which is pretty cool. So you can find everything for free on YouTube. That's what I always preach. There are plenty of great channels. I personally prefer Fat Cat's channel. He's amazing. He just has so much good content, and definitely check his channel out. But it's structured there, okay? On YouTube you gotta put it all together yourself. So now we come to the cons, which they're definitely things you need to be aware of, okay? So the first one, what I put here on the very top, is a big one, okay? So you can form bad habits. And this, in my opinion, is one of the worst things about those evaluations, which I became a victim of as well, okay? So I didn't do it the right way. I started the evaluations right away. I didn't trade sim. So I ended up busting a few evaluations at first in the beginning, okay? YOLO'd some, like oversized, scaled into losing trades, moved my stops, because then I was thinking, okay, they're running the sale right now anyways, so I can get for $20 a new account if I fail it, you know. And the worst thing is that sometimes it works, okay? So then you have these bad habits inside of you, and it's hard to get rid of them. So really treat the evaluation accounts and the combines like your real money, like your real account, okay? And I would even say, like, if you fail an evaluation, okay, then you go back to sim trading, and usually those firms on the rebill, they reset the account anyways. But don't go there, you fail evaluation, buy a new evaluation, okay? That's like, in my opinion, one of the worst things to do. So if you fail evaluation, you go back to sim, you wait the rest of the month, you kind of punish yourself a little bit, so the next time you don't make these stupid mistakes and you learn from them, okay? Obviously, then another rule is the strict rules and kind of traps. So for example, some firms have rules regarding your position size, but they still let you place this order, and when you place the order, then you failed. Same with the trailing drawdown rule. It's also a bit annoying because unrealized profits are with trailing drawdown are counted in for drawdown. Okay, so when you have a trade go $500 in your favor and then come back against you and stop you out for $200, now you're actually $700 in minus and closer to your liquidation point on the account. So those with trailing drawdowns, the evaluations, are pretty much only very good for scalpers who go for small moves, or you really gotta size down if you want to keep them running. But basically don't recommend to keep runners on if there's a trailing drawdown. The next thing is also a big one, is taxes, okay? So depending on the country, everywhere is different, so I'm not giving any advice, but usually in most countries, trading futures with your own money has a lot of tax benefits, okay? And if you're trading with someone else's money or you are an independent contractor, then you don't get those tax advantages. But I'm not sure. I just know how it works in Austria, and you guys probably are not from Austria, but obviously taxes is also a big one. Then the other side is with those few companies. So there are two kind of companies. There are those who put you on live after passing, okay, and then there are those who keep you on sim forever, okay. And the thing with those who do put you on live is that you gotta pay the professional CME data fee after that, okay. So then you pay like 130 or 140 dollars a month in data, which is kind of expensive, okay. If you trade your own money, it's way less. And then again, also the profit split. So you have 80 or 90% profit split with the firms. It adds up. So although then again, you have less stress. That's also a big pro. Forgot to mention it here. A big part is emotional, okay. Me, for example, I trade a lot better if I trade with a prop firm, because it's not my own money, okay. Even if I can withdraw it from a funded account, I don't treat it as much as my money, okay. I treat it more like a game, and that's why I trade better in general. So you gotta figure out what works for you. For me, it's better because I have a solid edge. The thing that messes with me sometimes is my mind, okay, and it's a lot better if I'm trading with a prop firm. And last but not least, a few little tips for passing combines, okay. The first one is a big one. So when you calculate risk and you say you want to risk 1% per trade, okay, you can't go off of it based on the account size you have. So if it's a 50k account and you say, okay, you're gonna risk 1% a trade, okay, that's not gonna work out for you. You have to look at the drawdown, okay. So on the 50k accounts, for example, you have 2,500 in drawdown, but treat it like you have 2,500 on this account, because if you lose more than that, the account is gone. Adjust your risk accordingly, okay. Don't go in there blasting 5 lots. Even for Apex, for example, where I'm at with the 50k account, which is like 2,500 drawdown, they allow you up to 10 contracts. But you can't trade 10 contracts with 2,500 drawdown, okay. So never ever trade the full size they allow you to. And yeah, basically that's it. Limit your risk, okay. Then read the rules, okay. So every company has different rules. I'm with Apex because they are very loose on the rule. They basically have only the trading drawdown rule. But other companies, for example, some have like a scaling plan that you're only allowed 1 contract in the beginning, and once your account gets bigger, then you're allowed 2 contracts, okay, for example. Also, you have to close all positions at a certain time a day, so you can't hold overnight positions with pretty much any company. At a certain point of day, all positions have to be closed or the account is failed, okay. You so make sure there's no order anywhere. Maybe need not even open trade, but not order anywhere sitting because you forgot to cancel an order, something like this, okay. Again, here, trade smaller than allowed, trade way smaller than I allowed, and also don't YOLO evaluations, okay. You might get lucky, you might pass, but you don't have any good in it. You don't learn anything from it. The only thing you learn if you YOLO those evaluations is you form bad habits, which gonna haunt you later, and you are not consistently profitable anyway. So even when you then have the funded account, you're gonna blow it up before you get your first payout anyways. And even if not, I just don't see the point. It just forms bad habits, okay. So always stay consistent, have your daily stop, try to stick to your rules, try to stick to your trading plan, and yeah, that's it for me. If you have any questions, hit me up. Thanks for watching this video till the end. I hope it helped someone of you out. If you want more videos regarding this topic, let me know in the comments. And yeah, I'm live trading every day, the US Open. You can watch and tune into my live streams. Yeah, everything is fully transparent here on my channel, okay? I show the good, the bad, the ugly. That's what I stand for, and let's go. See you guys on Monday.